Good morning, this is Dave Toth with an RJO MRT Technical Webcast update on the gold and silver markets for Monday, March 7th. Starting off here with a daily log scale active continuation chart of the gold market. You can see overnight's continuation of the secular bull trend to yet another new all-time high above last week's 1441 high. That reaffirms the secular bull trend. Looking here at a weekly log scale chart, the secular bull trend forever with bullish sentiment levels creeping back up to near the recent highs over the past couple of years that thus far have not succeeded in peaking this market out, and therein lies the importance of waiting for and requiring a confirmation of weakness via a break or relapse below a previous corrective low. If you look at just the past couple of years secular bull trend, and with few exceptions, perhaps the early 2010 break to define the intermediate term trend as down at that point, that proved to be just another bull market correction. Almost without that exception, this market has succeeded in sustaining every new high along the way. And by virtue of the past month's continuation of the secular bull trend, we could look at the 1309 corrective low from late January as this market's most important long-term level and the minimum level this market needs to fail below to break the long-term trend and expose a major reversal lower. On a closer, more practical level, as a result of this past couple of days continuation of the past month's rally on this daily scale, the market has defined the 1410 spot 60 low from last Thursday as the latest corrective low. This market now is required to fail below to arrest this bull trend, define a more objective high in resistance, and confirm a bearish divergence in momentum that would stem at least this latest phase of the rally from the January 28th low at 1309 and expose a larger degree correction lower. In lieu of weakness below at least 1410, further and possibly accelerated gains remain anticipated, and per such, a bullish policy remains advised, with protective sell stops now trailed to levels just below that 1410 spot 60 low. Similarly, looking at the daily log scale chart of the silver market, you can see the past couple of days perpetuation of not just the past month and the months or 5 weeks rally from the January 28th low at 2630, but a perpetuation of the secular bull trend. Looking here at a log scale quarterly chart that shows only the January of 1980 high, all-time high at $41.40 above the market that possibly might arrest this bull trend. But from a day-to-day and practical perspective, and as always, the only thing that stops higher prices is lower prices, and specifically lower prices below recent corrective lows like the 31.69.5 corrective low from February 24th. That on a broader daily scale is required to stem this rally and expose a larger degree correction or reversal lower. In lieu of such weakness below 31.69.5, the secular bull trend is considered intact, and further and possibly accelerated gains remain anticipated. From a shorter term perspective, looking at the 4-hourly chart here that details the past week and a half's recovery, you can see mid last week's setback from 34.97 down to the 34.03 corrective low on Thursday defines that 34.03 low as the latest and tightest corrective low, and risk parameter of this market is minimally required to fail below to even defer the bull trend in favor of an interim corrective setback. With as a result of Friday's and overnight's gains, former 34.97 area resistance is considered new support ahead of a continuation of the secular bull trend, with weakness again below 34.03, the minimum required to even defer a bullish policy, and a break below 31.69.5 required to threaten it enough to warrant neutralizing all bullish policy and moving and exposure and moving to a neutral sideline position. Please stay tuned to updates on these and other markets on our RJOMRT.com website, and good luck with today's trading.